Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So I'd like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So as we all know, today is Thursday. It's quite a busy day. So we are seeing volatility start to calm down after a very volatile Tuesday and Wednesday. So we'll be seeing major trends begin to reverse in the markets. So first things first, we look at the economic calendar and see what happened yesterday and what to expect for the day. And once we are through with that, then you can check out a couple of charts to see the level of price action. So clearly, yesterday was quite volatile with interest rates data coming from the Reserve Bank of New Zealand. Then later on, we saw CPI or UK inflation, and also two speeches from the Bank of England Governor Bailey. And the most important data release yesterday was the FOMC meeting minutes. So we had some major trends forming, especially in US equity indices, the dollar index, as well as on gold. However, immediately after the release of the FOMC meeting minutes, we saw some major charts changing direction. And one of the reasons this was happening is because for the first time, we are seeing a divided Fed. So during the last meeting by the Fed, which was on the 2nd of May, they decided to hike interest rates by 25 basis points. However, the minutes for that meeting were released last night. So looking at the final details of the meeting, we saw that the Fed was divided, where some of the members are more willing to continue hiking interest rates in order to achieve the 2% inflation target. However, for several participants, they noted that if the economy evolved along the lines of their current outlooks, then further policy firming after this meeting may not be necessary. So this basically some Fed members are mentioning that this may be the peak interest rate for the US, and that is overly deemed as very positive for equities. So remember, since the Fed started hiking interest rates in March last year, the stock markets have been bearish for quite a period, and that's over 1 year. But now that the Fed is almost hitting its peak rate, and the indicator is that some members were in support of pausing further rate hikes, this led to a very big spike, especially in the NASDAQ 100, which is majorly tech dominated. So the trends that we had been seeing over the entire week were basically the market attempting to push down lower and lower. So right from Monday, which was a mixed day, Tuesday, then Wednesday, a very sharp drop. And then last night, you can see the big spike that happened in the opposite direction, indicating optimism that the stocks could continue to rally as a result of the Fed pausing the rate hikes. So it was the same story for the US Tech 100, a very big spike, basically reversing the earlier losses and also some part of the losses that were experienced on Tuesday. So it was the same story for the Dow Jones. However, if you look at the chart correctly, you'll notice that the rise was only short-lived. So the Dow did not rally for long before resuming the bearish momentum. So you can see the Dow has been the weakest index among the top 3 US indices. So besides these, we also had reactions happening, especially for European equity indices. For instance, the Euro stocks or the Euro 50 had been dropping sharply. So yesterday in the evening made some form of recovery here. So there was a big spike here, and then early this morning a spike before we resumed the original trend. And also for the UK 100, you can see we've been having a very big spike downwards. So made some reversal yesterday, but from this morning's price action, it shows indications of continued momentum to the downside. So on one side, we're expecting that the Fed may pause rate hikes, and that would be very bullish for stocks. There's also the real concern of the US debt ceiling that's currently basically dominating market sentiment. So we know that the debt ceiling negotiations between President Biden and the House Speaker Kevin McCarthy have not made any progress. So they have not been able to agree on a deal, mainly due to the demands from the Republican side, where they want the US government to cut or limit its spending. But then President Biden wants the deal by all means, but he's not willing to agree to spending cuts. So in this case, the deadlock between the two sides is leading to a potential risk of the US government defaulting on its debt. And now within the next 6 days, there is a good chance that the US will begin defaulting on some of its obligations. And this is a big risk factor that could lead to a massive sell-off in US equity indices. So where on one side, the Fed meeting minutes are indicating some bullish momentum, then the debt ceiling deadlock is indicating some bearish momentum. So far, there seems to be mixed signals in the markets. And from what we saw in the gold price action, chart that has been consistently moving downwards after hitting an all-time high about 3 weeks ago, seems to have found some very nice support and is seemingly holding really well. So from the 18th of May bottom, you can see the market bouncing to the upper side, going back down and then breaking this trend line. So the trend line was broken, the market got this resistance here, and then went back down yesterday in the evening. And then from today's price action, the market seems to be bouncing from yet another trend line here. And there seems to be bullish momentum or signs of bullish entry. So there is a good chance we'll be seeing some further upside happening in gold prices as we proceed with the trading day. So the dollar index was facing some resistance here yesterday and the previous day. So you can notice the number of times it was attempting to break this area here. So went up, failed to break, and then yesterday eventually broke and moved to the upper side. So trading for the day basically presumes that we are having a very strong dollar. So if you look at the dollar index and how it's trending at already hitting 104, then there's a good chance that we'll be seeing the dollar being much stronger against other currencies. So for pound USD, it seems like the pound is making a recovery after having bounced from the lower trend line. So perhaps for the day, we could be seeing some pullback happening here, especially when you consider the technical pattern along this level. So it's also important to look at the higher time frame to notice that this was a major support level. So the pound USD is currently bouncing from a key support level. So we could be seeing some further upside happening here. However, if this was to be broken, then we could be trading lower. But judging from the previous candlestick on the 1 hour chart, this is a clear rejection of lower prices. The long tail indicates some form of entry by buyers. So there is a good chance we'll be seeing some recovery in pound USD. As for New Zealand USD, clearly, after the announcement of interest rates and the big shift that happened after that, then we know that the Reserve Bank of New Zealand has hit peak interest rates, and the chart managed to drop all the way to the most significant support on the chart here. So clearly, there's a good chance that the market will be bouncing from this area. So if I was to zoom out my chart, you'd notice that there's an upper trend line and a lower trend line following here. So the market managed to break the lower trend line here, but then it got to a major support level around 0.60833. So from this big, massive drop, then some form of pullback or profit taking is expected. So there is a good chance we could be seeing the market retesting this trend line later in the day. So as for EURUSD, also you can see the kind of trend line that has been observed in the EURUSD currency pair. So it seems like the euro is still weak and the market is consistently pushing further downwards. And there are several retests on the 1 hour chart. So we just bounced from the 1 hour chart. So from what I'm seeing here is a market that rejected this resistance and went back downwards, and there's still more downwards room. So if the dollar index persists with the strength, then some further downside in EURUSD could be playing out today. So as for USD CAD, remember we still have our triangle here. Our market broke out, retested, and then rallied yesterday, broke this resistance and kept going up. We have not yet hit our target of 1.36365. So there's still some room for some further upside in USD CAD. So as for USDN, we had this particular triangle, or what I would describe as a rising wedge. So from this rising wedge, you can see that the market broke to the upper side, and there was a sharp retest on the first hour of trading today. So market pulled all the way back down and then went up. So expectations are in order for some further upside. And from the daily charts, you can see it's a very strong bullish momentum. So I expect to see some further upside. So if this pullback persists and the market eventually gets back to here, then the idea is still to look for a bullish position because the breakout is clearly on the upper side. So then for AUDUSD, we had a breakout to the lower side, a retest and a continuation. And now from what we are seeing, especially on the daily chart, it's a market that has made a clean break towards the lower side. So in this case, the Australian dollar is really weak against the US dollar. So from yesterday's daily candlestick, it's a clean break. So some further continuation downwards is expected. So any form of pullback might be taken as a good signal to start looking for a potential selling opportunity. So if this was to happen, then I would be looking for signs of weakness to trade the continuation towards the lower side. So that's it for today. We also have Brent oil here, making a very nice break, pullback, another pullback, and going up. So I'm still very bullish on this one. After breaking outside this triangle, I expect to see some further upside in Brent oil prices. So there's also talk of a ship that is stuck in the Suez Canal near Egypt. So there's a good chance that that will cause some volatility in the markets. So remember, if the Suez Canal is ever blocked, then that's pressure on the upper side for oil prices. So more on the story later. So you can check out on the story, ship stuck on a Suez Canal. Then from there onwards, hopefully, we will have plenty of opportunities later in the day. So from the economic calendar, the key highlights for the day are as follows. One, in the morning, we didn't have much happening. Germany is officially in a recession, just printed a second quarter of less than zero GDP, or basically a second quarter, consecutive quarter of contraction. So it's very clear now that the economy of Germany is basically in a recession. Then the next set of data we'll be expecting to see is preliminary GDP data for the US, which is expected at 1.1%. Unemployment claims at 249K. Preliminary GDP price index at 4%. Chinese CB reading index, and then pending home sales, natural gas storage, and a speech from MPC member Haskell. So remember, the market snapshot series runs from Monday to Thursday. So tomorrow we will not be having a session. So we will be focused more on Japanese inflation data from Tokyo. Then SPPI before we move to retail sales for Australia and retail sales for the UK. And the most important data for tomorrow will be the core PCE price index, which is a data that the Fed focuses on in order to measure the general price level of the US before making decisions about monetary policy. So this is expected to cause a lot of volatility in US dollar pairs, US dollar equity indices, and also on commodities such as gold and oil. So that's it for today. Thank you very much, everyone, and I hope to see you on the next session. Good question here. Why is the gold not on extreme pressure from a strong dollar index? So there's a lot of hedging going on. the risk with the debt ceiling is still significantly high. So there is a lot of investors that are currently buying a lot of gold to hedge their positions from that pressure. So there's a good question here, symbol of the US dollar index. So just search USD index. USD index. Why has a pretty weak New Zealand dollar been performing fairly against much stronger currencies like the USD and the JPY? I don't think it has been performing fairly. There was a big sell-off on New Zealand USD. I think you can all see this. I wouldn't say this has been performing fairly, especially when you consider this big sell-off here. So even on the daily, we know that the Reserve Bank of New Zealand is currently the most aggressive central bank in hiking interest rates, which is expected to be very positive for the New Zealand dollar. So this was supposed to be the strongest currency in the house. But since the central bank decided to pause on interest rates, then we had a big sell-off happening here yesterday. So last question. Do you have an episode within the Novice to Pro series where entry and exit strategies are being elaborated? Been revising the episodes but can't find it. I think I've done an episode on the same. Just search on the FX Pesa channel. You should find one in there. It's not in the Novice to Pro series, but it's within the channel. So where do you normally get fundamentals, first-hand information? I think a good site is Financial Juice. So I'll be sharing a link with you. So thank you very much, guys. I really appreciate you, and I hope to see you on the next session.